If a nice one, if you were to journal your trades in 2026, how best or how could you have done it? This is actually the best way I could have done it in 2026. I just decided to do these videos for me in future, so that at least I can sit down and rewatch the videos and see what was I looking at, and actually my emotions toward a certain setup. What did I violate? Which rule did I violate? And how best can I fix it in future? And having that in mind, I just decided I will be recording these videos every time I will be taking a setup. We did the first setup, which is actually, I'll be reviewing it very soon. And today I have seen another setup, which I actually decided, let me just do a video so that at least I can see, so that at least everybody can see how we will perform after this. Now, you need to understand that trading is 98% psychology and only 2% is your trading system. And therefore, you might have one of the best trading system. Unfortunately, you never find yourself being profitable. Yes, therefore, you need to master the art of being calm, not greed, then being disciplined, and the consistency needs to be at the top. Now, let's go straight forward and get to analyze everything that I'm looking at currently, and actually why I'm intending to take this kind of a trade. Now, remember, let me just go straight forward. Before I do the analysis, you need to understand that my trading strategy is divided into two. I'm trading from the idea of the price in forex markets do not actually move randomly. The price markets in the forex markets do not move actually randomly. I trade from the idea of that interest rates are the heartbeat of price movement in the forex markets. That's all. So I need to understand what the interest rates are looking forward. Like, are the central banks looking to hike their interest rates? Are they looking forward to cut the interest rates, so that at least I can I can have a bias on a certain pair. Now, having that in mind, therefore, my trading plan or my trading system is actually divided into two. The first category is based on the fundamental. Then on the fundamental is also divided into two. Then the technical analysis, the fundamental analysis for me to get bias. Then on the technical analysis is divided also into two. And then these will only focus on where is the price likely to react. Remember, fundamentals can give you the direction of the price, but they don't tell you actually this is when we are going to move to this direction, or actually this is where we are going to start moving towards the direction of the buyers. Therefore, having that in mind, let's get into it. Now, the first category, let's cover the first category. I always start with the fundamental analysis. Let's cover. So the fundamental analysis is quite simple. If you check very well, what currency are we trading right now? It is GBP. It's actually Eurjpy, which is now Euro against JPY. We need to understand what is happening in Europe and then Eurozone, and what is actually happening in Japan. Now, let's get straightforward. The first thing I happen to look, if you watch it from the previous videos, this is what you'll see. So the first thing you do, or I do, is just go to a very good website by the name Trading Economics. I said that I'll be having everything in order. So the first thing I do is to go into this very good website, which is Trading Economics. Then on the Trading Economics, I'll be focusing much on what we call the euro. So I'll just go into the euro area. Then the moment I'm into the euro area, I need, first of all, the first thing I'm going to look at is what we call the GDP, which is actually the gross domestic product. So I'm just going to the GDP, which is the growth rate. Then I'm just going to check what actually we are looking forward. Now, what I'm looking forward right now is simple. I'll just look at this bar graph, and then I will look from the previous data. Did we do an increasement, or did we do a drop? Actually, you can see very well that is on quarter 2 2025. It was at 0.1%, and on the quarter 3 of 2025, actually we were on the we did an increment, increasement of up to 0.3%, and therefore it tells me that the GDP in Eurozone is actually rising. And then if the GDP of Eurozone is actually increasing, the next thing I'm just want to cover, it's just in the same euro. The second thing I want to go for is what we call the inflation. Now I'll go to the inflation rate. Therefore, on the inflation rate, I need to understand actually what is happening on the Eurozone. Now, this is the thing. if you happen to check on the Eurozone, you can see very well that inflation is actually dropping from the previous one, which was 2.1% up to 2%. Now, that is a decrease in terms of inflation. But there is something else you need to understand, that the GDP is also increasing, is expanding, and inflation is dropping. But get to understand, the decrease or this kind of a divergence whereby GDP is dropping, that is now GDP is dropping, and I repeat, GDP is increasing and inflation is dropping, it gives a vibe whereby the interest rate is supposed to be cut. Are we together? But for this case, the GDP is increasing, then inflation is yes dropping, but it is within the central bank. Within the central bank. I repeat, within the central bank inflation target, which is 2%. And therefore, what is their bank stance when it comes to the Eurozone? The previous meeting that we had, we listened to the policymakers in Europe, and we could hear them saying that actually Eurozone is in good condition since the inflation is within the target. And therefore, that tells you they are neither looking forward to cut or hike the interest rates. And then there is a high probability there is what you call holding of the interest rates. And therefore, that is actually giving you a very hawkish vibe, telling you that euro is in a very good condition, and therefore we might see a very good push to the upside when it comes to the euro. Now, that is now the last thing. That is now the thing that you're supposed to look. Then the next thing that you're supposed to understand is, I've already covered the bank stance, and I've said that they are saying that they are in a very good condition, and therefore euro is in a better position. So the next thing that I want us to cover is look at the unemployment rate. Let's look at the unemployment rate. Actually, if you check on the unemployment, is actually dropping, whereby it was kinda in a very good stagnation. Yeah, very constant at 6.40%, actually dropped to 6.30%, which is actually saying that unemployment in the Eurozone is actually dropping, which is a very good thing for the country. And therefore, that tells me that euro is in a very good condition. Now, on euro, we have a very good conclusion that we are looking forward to increase the interest rates. If you want to go further, you can still go back and you can read. If you don't understand what is bank stance, you can still come back to the interest rates. Therefore, we can read and understand what is actually the Eurozone, what are the policymakers, what are they saying. Now you can see that the ECB left borrowing cost unchanged for the fourth consecutive meeting in December 2025, with the main refinancing rate remaining at 2.15%, and therefore and then you can get to hear that and the deposit policy rate holding at 2%. The decision came in line with the expectations, and policymakers reiterated they will continue to follow data dependent and meeting by meeting approach. And therefore, it tells you very well that euro is actually very bullish. Now, having covered that, we have a conclusion, and therefore the next thing we want to cover is the same thing when it comes to the Japanese yen. Now, on the Japanese, you have only to go for Japan country, then cover the thing. From the previous data, from this previous setup, or from the previous trade, we covered this, so you already know what. But for the purpose of this trade, I just want to go deep into it. Now, let's check on the Japanese yen. So the first thing we are going to cover is GDP, and when you check very well on the bar, I will be straightforward on this. You can see very well. If you want to understand more Japan, you can still look at the first setup. Now you can see on the GDP is actually dropping, and therefore telling you that Japanese growth actually net worth is actually decreasing. Now that is now the GDP. Now the second thing you want to cover is inflation. Inflation, let's go to the inflation rate, and then when you check on the inflation rate, this is the thing you need to understand. Now inflation rate is actually dropping from the 3% up to 2%, which is 2.9%. now you need to understand, even if the inflation is dropping, 2.9% is way high compared to the central bank, to the Bank of Japan inflation target, which is always at 2%, and therefore it is not good. It's not healthy for the country, and therefore that now gives you a very dovish vibe for that. Now inflation is dropping, and then GDP is also dropping, and therefore that GDP is also dropping. And then you need to understand, both of them dropping, there's a high probability they should be cutting the interest rates. That is now the logic. If you don't get to understand how if you don't understand the relationship between GDP, inflation, and interest rates, you can reach out to me. I go by the name Waweri Kelvin. I'm a currency trader and also a trading coach at RatePulse Market. So you can get to reach out to me and get to understand. Now, I will try to be very quick so that at least for me to be in a position to execute the trade without being late. Now, we already know inflation is dropping, and inflation is dropping, GDP is also dropping, so we expect the cutting of the interest rates. And therefore, having that in mind, we need to understand what is their bank stance. Currently, if you were to listen from the last time of Ueda, that is now the governor of Bank of Japan, was saying that they were signaling the hiking of the interest rates, and therefore they are saying that they will be raising the interest rates. It is true, they might rise or they might increase the interest rates, but from the understanding of microeconomics, you understand, even if they will be hiking the interest rates, it will be a dovish hike. So you need to understand, it's not the first time it has happened. There's a hike in interest rates. Interest rates are increasing, but the currency is actually weakening. So you need to understand, they might hike the interest rates, and then it will be a dovish hike. And also they can cut the interest rates, saying that the currency is supposed to be weak. Unfortunately, the currency tends to go to the upside, and therefore that is what we call hawkish cut. So you need to understand the vibe, and you need to understand the microeconomics. Now, having that in mind, we already understand that we are looking forward to what we call dovish hike. So we have that in mind. Then the last thing that we want to cover on this on the Japan level is just to go and understand what we call the unemployment rate, which is quite simple. So just come, go look at the unemployment rate. I didn't get to see, and then when you look at the bar, you can tell very well that Japan unemployment is at the top, the highest level, and that straightforward tells you if the unemployment rate is very high, it is very it's not healthy for the currency. Now, that is now step number one. You've already covered. You have already seen that euro is bullish, JPY is bearish. Then the next thing you need to understand is that even if the market is trading according to the interest rate expectation, there's what we call market price being obsessed. What is the current obsession of the market price movement? And this is whereby I have a very good rule whereby I need to check how many days do we have for for us to have interest rates being released. So for the two of the currencies, I will first of all check. So I have a rule. This is the thing. 2 weeks, I repeat, 2 weeks, that is 14 days or less than that is now within a range of 2 weeks. The market tends to, 2 weeks before the interest rate release, the market tends to be obsessed with the market interest rates expectation. And therefore, both of them, you can see from these, you can see from my FX book, Japan, we only have 13 days. So it tells me that Japanese yen price movement, the market will be obsessed with the interest rates when it comes to Japan. And therefore, if the market will be obsessed with the interest rates, you need to understand what will be the headlines be like. Now, the headlines will be like, this is the thing that I'm expecting. The interest rates, since we have seen, they are looking forward to hike their interest rates. So the market will be much obsessed with the doubting of the interest rates. Why is there a doubt? It's because the GDP is falling, inflation is also decreasing, but it's very high from the Bank of Japan, inflation target. And again, unemployment is very high. And therefore, it tells me that whatever the market will be interpreting is that there is a doubt in Bank of Japan, hiking of the interest rates, and then we shall be having dovish hike. Therefore, the next thing you need to understand is to cover on the Eurozone. If you check very well on the Eurozone, we still have 27 days, which is very far away from the rule of 2 weeks, and therefore tells me that the market will be obsessed with something else, but not actually the data. And therefore, this trade is basically measured on, or it is supposed only is measured on what we call the Bank of Japan. Is actually based on Bank of Japan price or Bank of Japan interest rates expectation. That is all. So on the fundamental analysis, we know Eurjpy is bullish. Now, remember, we need now to understand where the price actually might react from. So the second thing you need to understand, The second thing on the technical analysis is how we divide it. So the first thing we are going to do is to understand where the price is likely to happen. And therefore, where is the market likely to happen? The market is supposed actually to happen. First of all, we are going to support that to mark support and resistance, which is key straightforward. So I'm just going to mark this as my support and resistance. It is quite simple, the technical analysis. So that is my resistance there. And then I'm going to mark my possible resistance support retest there. And then we are going to have another zone here. So I only mark 3 of them. Now, the moment you mark 3 of them, yeah, this is, remember, we start from the daily. Then once you mark on that, the next thing that I'm much interested in with is actually simple. I'm looking for what you call imbalances. Now we can see very well that the market has imbalance there. We have an imbalance there, and then we have an imbalance there. And then once we have that imbalance, the second thing that we need to understand is I need to look at what we call the break of structure. Now for the break of structure, we can tell very well that we have a break of structure down here. This is the thing. So we need we have a break of structure to that level, but we shall not pay much attention to this because the price is actually far from that. But there's high probability still market can still come back into that zone. And again, we have another break of structure on this level. So we have marked the break of structure. We've marked actually imbalances. So this is the thing. Let me actually, what is it, my guy? Okay, so we still have these break of structures on that zone. So the moment we have that break of structure, the second thing that we are going to mark, I might not pay much attention to this zone, but I will be paying much attention to this. Now the moment you have this break of structure and the imbalance to push into the upside, you still to have, like, you need to understand that there is high probability we might have a demand zone in this level. We might have a demand zone from this level. Let me just highlight it and mark it as a demand zone with blue. Now this is now my demand zone. Now from that demand zone, you can tell very well, now we are looking forward to buy from that zone. So we've already marked that. So the second thing that we want to mark is actually to go into one lower time frame for us to refine the demand zone. Remember, there's someone who will come and say there's a demand zone on that level, there's a demand zone on that level. Are we together? There's a demand zone there, and there is also a demand zone in this zone, like in this area. Actually, so we have 2 types of candlestick demand zone. So we have those 2 types of demand zone. Are we together? So we have this demand zone and we have this demand zone. Yeah, but in general, the 2 of these are demand zone. Now, if you check very well how we do on the demand zone, you need to understand that in demand zone we have 2 types of demand zone. We have 2 types of demand zone. We have what we call pivot demand zone, or we have 2 types of supply and demand zone. Yeah, whereby we have a range or pivot supply on demand. And therefore, we need to understand which kind of a demand zone is this. This one is a pivot demand zone, and also this one is a range demand zone. How do you identify a range demand zone? A range demand zone is always having what we call a liquidity sweep. Supply, pivots, range supply looks like this. That is now a supply range, supply or range supply, and the demand zone, range demand zone looks like this. Yeah, that is now the difference between the 2. So it must have a liquidity. So on this level we can tell very well. Yeah, so let's go straight forward. On this one you can tell very well this one is a range demand zone. We can tell very well that we have a demand zone here. The price pushed up to that level, pushed up to that level, pushed up to that level. Then we had a pullback, then a projection to the downside, taking out clear like after clearing this liquidity zone here, then pushed to the upside. Are we together? Then boom, then we pushed to the upside. Now having that in mind, so we have this whereby this is the demand zone of the range, which was mitigated, and then this pivot demand zone. Now having that in mind, we need first of all to understand which of these demand zone is unmitigated. Yes, which is fresh. How do you get to understand this? Now, from the understanding, let's just me have this one. as my demand zone. Everything here is my demand zone, but we need to clarify which of these demand zone is fresh. Now just take, if you check very well, this was a price range. It was an accumulation. I call it as accumulation of orders. So this one was a accumulation zone. Then out of this accumulation zone, the 50% of this zone is actually below here. Was actually below here. Remember, we are on the 4-hour time frame. We are refining this zone. Therefore, it tells me that being on accumulation zone, we need to understand whether the price actually came up and mitigated the range. Therefore, I'm just going to have it done like this, the range, and then let me just have the 50% the 50%. Let me just have it as black. Black is more visible. Then I will have it that way. Then I will just click on that. Therefore, we can tell very well that actually this price, yes, it pushed below the 50% of this range, which is now saying that it went and mitigated the range demand zone, and therefore the unmitigated one is this, what we call the pivot. And therefore, for now, this time round, I will just mark this one because sometimes the price tends to still come back into that zone. Yet, so I will still mark that zone as my range zone, and also have my zone, this zone here. So for these two, I will be having the two of these. So I will just have a push date as my demand zone. Yes, that. Then on this demand zone, this pivot, if you were to go on the lower time frame, I need to refine it now on the 4-hour time frame. Now on the lower time frame, remember we are working on this, and this demand zone is actually in the 15-minute or in the in the 4-hour time frame. So you need one time frame low. If you check very well on this demand zone, it is not quite straightforward. Are we together? So the first thing I need to check is how the price was performing into that demand zone. Now you come to realize on this range, we had this push to the upside, like this push to the downside before, like, which was a drop, and therefore it was giving us what you call breaker block within this zone, breaker block in this zone, and this row zone was actually mitigated. And if it was mitigated, so I will be looking forward to interpret on this. Now on this, if you were to go even into the lower time frame, we need to see a huge move on the demand zone. Trading is not easy as people think, and therefore you can see very well that we had another move to the downside with a very huge move to the downside. This move in the 15-minute time frame, we had a massive drop, huge candlesticks. Yeah, we had a very huge candlestick to the move to the downside, and therefore tells me that this one actually there were some levels of whereby the demand was actually playing against the supply zone, and also I can have this one as my breaker block, their zone, that zone, and therefore I want to see whether the price, how the price will be reacting from that. Let me just have something else. Let me just have it yellow that way, and then we can have this done, and then we still have to go into 1-hour time frame for us to look for an entry. Now for this pair, we still have these two zones. You can see how the price is actually reacting very well into this level. Now this is the thing, when the price, you have two demand zone, we have this demand zone and we have this demand zone. For us to verify, yes, this is now the time you need to wait for the price to play and get you a very good entry model. You need to understand the rules of entry. Now we now understand the price is likely to react from this whole zone. This zone, the blue one, this is where the price is actually supposed to react. Now get to understand, when you understand that, it is quite simple for you now to go into the entry or straightforward to entry rule. Entry rule says that whenever we have a demand zone, which is whenever we have more than two supply or demand zone, we should be waiting for a very good 1-hour price CPI, which looks like this, which is a liquidity first of all, then a push, then a retest, and then we can go up to the upside. What do I mean by a CPI? CPR. CPR is quite simple. It is just like straightforward. It is what we call the capture this is now the capture, whereby most of the people are buying from this zone. Then we go get them captured. Most of the people are selling from this zone as a break of structure. Then we have the capture. Then we have the pain. They are getting into pain. Then they get relieved. Then we move to the upside. Simple as that. So this is the kind of a setup whereby I'll be looking towards when it comes to 1 hour time frame, which is simple as the liquidity sweep. Now let's go straight forward. We've already now come into this. This is the price which got into the price has already gotten into this area, whereby we have seen the liquidity. Let me just draw it. The CPR is actually playing out. Very simple. We have this kind of a consolidation. Yeah, consolidation. Price is making into that equal lows, almost equal lows there. Then price pushed to the downside with massive candlesticks. Then after clearing this liquidity, price actually pushed to the upside, giving us what we call change of character. So actually what I'm waiting for is what we call price coming back into this zone, then the push to the upside. Simple as that. Simple as that. So therefore the price has already played out, and then my stop loss will be below there. Now let's come. I'll be having my long position limits, and then we shall be risking, supposed to be risking below there. When you if you happen to check, this is below there. Actually the stop loss is supposed to be below there, and therefore we can have a stop loss at 50%, 50 pips, which is actually my stop loss around around there. So it is very simple. Then we can have the push to the upside. Actually I don't know where to get in, but now this is where I'm supposed actually to be getting in from that zone. Unfortunately, something else you can do, you can just take your Fibonacci retracement, the starting of that leg up to that position. Then you see that the 50% is actually on that level, and therefore I will be saying that that is 44, 45, the 46 zone up to their position, up to that position. Now you can also drop into 15-minute time frames to look for a candle into this movement to the upside, which is not actually clear, which is not actually more clear. So I'll be looking forward on this candlestick. Let me check. I need to see where there's a push to the upside. Actually where there's a push to the upside on this move. It's not like something magical, but I'll just play around with that zone there. Yes, let me just have it there around that zone. Yes, there. And then I will go into 1 hour time frame so that at least I can see whether my stop loss is actually, that stop loss is way big. Yes, so it's only to 52 pips, so let me just reduce it to around 51 pips. Yes, there. On the line graph, you can also use the line graph to be precise. You can see the CPR playing very well. So my yes, my take profits is so above that zone. Yes, my stop loss should be there, and then my stop loss should be around there 50, and then my take profit is there. Then I will have the candlestick played, and then we can call it a day. Actually, let's see how the price is actually playing. If the stop loss being below here would cover where the price is actually right out, is the price is at right now, I would have just gone straight forward, execute. Unfortunately, the price is the stop loss or the risk is very high. Yes, so my take for the first take profit, the first trade with be a buy limit all the way from there, and then that buy limit we shall be going to check whether the price will actually be playing, and then my take profit, of course, you need to understand where you should be taking out. So this is my take profit one. This should be, let me just mark it, it's supposed to be dashed, then supposed to be on blue, and then yes, and therefore this one should be the take profit. Let me just go straight forward and have it written text. Then this one is always TP1. Remember, this one is a swing trade, so we don't I am not in a hurry. Then I will just make it bottom alignment, just make it top, and then just make it center, then have it there, then come it here, and then save the drawing as TP1. Next time I want to go and hesitate, so just make it there, and then we shall be having it let me just go to what That is now take profit number 1, and then we shall be having the rest of the positions. Remember, it's only 3 positions, so the rest of the positions will be open, and then let's wait for the price and see how the price actually played out. That is now my setup number 2, and let's wait and see how price actually be playing. Now I'll be doing a quick review. I'll be doing a review of how the price actually played out, and we can see how we made either, like, even if you happen to make a stop loss, if we hit that stop loss, I will be waiting for the price still go back into this kind of a range demand zone. I will not be trading from this zone. Yes, I will be waiting for the price to see how the price will actually be playing out from that zone. Actually, then after that we can get maybe to see whether we will be getting another execution. It is quite simple. Right now, having said that, and having covered that, just a reminder that I go by the name Waweru Kelvin, and I'm a currency trader and also a trading coach at RatePulse Market. If you want to know that kind of, if you need to understand the fundamental analysis, you can still reach out to me. And of course I can take you through. Remember, this video is for entertainment. It's just for entertainment. This one is not a financial advice. I repeat, this one is not a financial advice. Yes, disclaimer, this one is not a financial advice. Remember, trading is a very risky game, and can lead you to losing a lot of money, and if not actually taken seriously, and also with the restriction, you can actually lose yourself. Trading is very hard. It's not easy as people tell you that trading is easy. Trading is hard. Yes. Even if you are reaching to me for you to understand everything that I know in terms of fundamental analysis, in terms of technical analysis, just get to understand. It's very hard. Right now, even if you were to cover the fundamental analysis, which I have been covering, like I have covered here, you might not understand because you don't actually understand what is on the other screen that I have. Actually, I'm looking at fundamentals. Remember, this time round, the market is obsessed with what we call job market on the US, and also next week we shall be obsessed by what we call the economic growth in the Europe zone. Anyway, thank you guys. I will do a review. Let's wait and see how the price actually plays out after this. Anyway, see you guys, and see you to the review of this kind of a setup. See you guys. I go by the name Kimsi, and I want to wish you all the best and in your trading journey come 2026. See you guys.